Lonmin shares traded at R304.82 a piece at its highest in 2008. In January this year, it was R31.60 a share. And in June, the company's largest shareholder, Glencore, divested its 24% stake in the company, and today Lonmin trades at R11.16 a share. That is a drop of almost 97% since the heights of 2008. This has prompted many to say that valuations are so cheap, they offer nothing but great value. But not all agree.
I think Lonmin and many other commodity plays at this point in time are exactly that, value traps. The price of commodities has slid dramatically in recent times, and what we saw on Friday was a real bloodbath amongst diversified mining companies and single mining companies as well. So I think while that persists, while we're still seeing a paucity of demand amongst the Chinese particularly, because of the change in the nature of the Chinese economy, if that is going to continue, then I think commodity prices are going to continue to slide, and it's going to impact on the market capitalizations of many of these mining companies.
The company, as the rest of the mining sector in general, has been afflicted by a perfect storm of rising costs, labor unrest and weak metal prices. Following last year's crippling 5-month strike, platinum producers have raised output. Higher output can reduce unit costs, but it also feeds into an ongoing platinum price slump over the last 5 years, which has been only partly offset by the rand weakness. Lonmin's market value is now around 6.6 billion rand. That is just more than $500 million, and according to analysts, this is about the cost of sinking a single mine shaft. And sinking a shaft in today's environment takes more than courage.
The input prices of sinking a new shaft anywhere in South Africa has become prohibitively expensive. So you've got to be awfully confident that the ore that you dig out of the ground is going to be economically viable. You're going to be able to sell it. And I think the fact that you had a 6-month strike last year had absolutely no impact on the platinum price whatsoever. I think the agencies that monitor the price of platinum are finding it increasingly difficult to actually work out what the level of stocks above ground. And while that persists, while demand remains precarious at best, I think it would take a great deal of confidence and a great deal of boldness, and you'd have to be very, very brave, basically, at this point in time, to spend that amount of money on sinking a new shaft.
Restructuring has to become the order of the day. Lonmin were not available to comment, but the company said in its 2014 annual report that it expected 2015 unit costs of production of around 10,800 rand per ounce. Thanks to rand weakness, the current price is just above 12,000 rand per ounce. Gunter Deutsch, SABC News.